Hello, legends. Welcome, welcome. Good to have you with us, Cotstar. So it's the 21st of November, maybe the 20th, wherever you are in the world. The Daily Buyer Show today, we will go through quite a few different charts as they relate to crypto. The theme I posted is that Bitcoin's in a bear market, but how long? That's the question, right? Is this bear market different to previous bear markets? Does the adoption of the asset make it different? Are we going to have a full year bear market like we have historically? The truth is, I don't know, but we'll go through the different signs, signals. I'll share some of my thinking, and most importantly, we'll leave it to the charts. We'll go through the charts. So let's start off where we usually do with just an overview of net liquidity and what some of the economics are telling us. So net liquidity still flat. If you're not sure what net liquidity is, just jump through any of my previous streams or any of my other videos or any of my content on X. I go through it thoroughly. Net liquidity is still flat, doesn't support us going for any type of new parabola right now. So, you know, again, if we wanted to see price discovery, if we wanted to see bull market-like behavior, then net liquidity needs to be doing this. Right now, net liquidity is flat, and when we think about what some of the drivers of net liquidity are, namely right now, the rate cut trajectory, it doesn't really look good. I wrote up here on the chart, rate trajectory is volatile, because over the last few days alone, the probabilities have been changing. Right, we've gone from high probability expectation, market expectation of a rate cut, 98% a month ago, down to 39%. Right, see the probabilities just keep changing, and I did flag this quite a while ago, where we are in a high rate environment and rates aren't coming down as aggressively as they have been during previous bull markets. So the current trajectory now has the next cut potentially in January, then maybe another cut in March. So all of this just doesn't give the market certainty on the call it the price of capital, right? So big participants look at this and don't get the certainty that they can get capital for cheap and go and deploy it into markets. Essentially, that's what I'm reading from the rate cut trajectory. Now, just quickly on some of the economics, we had unemployment. Where'd all this go? This data was here a second ago. What happened? There we go. So unemployment is slightly higher. However, payrolls, massive beat on payroll. Non-farm employment change and unemployment claims are lower than expected for this week. So again, it's mixed data, and right now it's not data that screams step in aggressively for rate cuts. Well, not on what we're looking at right here, right? This is stronger labor data. If you want rate cuts to come in aggressively, we need weak labor data, and the Fed has been telling us that's what they're looking at lately. They're looking mostly at labor. They're not really looking at inflation as much yet. They're looking at labor. So the data is coming back to the charts. The data is suggesting that rate cut trajectory is not like this. Okay, is not like this. Down, potentially down here to zero, like these previous cycle environments where here, this was leading into the 2021 peak, low rate environment. Now, at the same time, we don't have a QE environment yet. right? The balance sheet of the Fed, at best, we're going to get some flattening, right? With the Fed stopping QT. But if you want money printing, we need to see the balance sheet increasing. Okay, so we won't spend too much time on the economics because it's the same story I've been talking about recently. And if you've been keeping up with my posts on the scenarios, this is scenario 3 where the liquidity conditions are actually tightening from what we're seeing rather than all of the speculation that's out there about, you know, this liquidity, they're going to stop QT, rates are coming down, all this sort of stuff. It's well and good to speculate, but we've got to look at the data and we've got to trade and invest based on the data, right? And the data right now is telling us that even if, let's say they stop NQT, unless we see balance sheet increasing, it's unlikely to drive liquidity, net liquidity. Unless we see more aggressive rate cuts, it's unlikely to incentivize cheap big players to come in because of cheap capital, right? Now, the other thing I wanted to flag was the Japan interest rate. Now, Japanese liquidity underpins a lot of the global liquidity. Okay, I'll leave it to you to go and research some of that. You can research the carry trade. But in a nutshell, what happens is Japan prints cheap money and institutions take cheap yen and deploy it into risk markets and other markets globally. Okay, so when the yen is not cheap anymore, it incentivizes Japanese liquidity to retreat back to Japan. Okay, and that's something we just need to keep an eye on because there's already talk that there might be a hike at the next Japanese Bank of Japan meeting. So if Bank of Japan does start hiking, they're already at the level that, if you look here, this was the GFC. Leading into the GFC, the Bank of Japan was hiking, okay? And then we all know what happened in 2008. Now, we're at the same level, interest rate level, that we were at leading into the GFC. Now, again, I'm not a speculator. I don't know what this actually leads to. I don't think anybody really does. But I'm just flagging this as another point of understanding what's happening globally with the liquidity, because liquidity is what drives markets, and that's all I care about, because crypto is a liquidity machine. So if I want to make my money in crypto, I better understand what's going on with the liquidity in markets. Okay, so this is something we need to keep an eye on, because if they do decide to continue hiking rates and they hike, well, then we better be watching closely the USD JPY and the Nikkei, right? Because typically the USD JPY, as long as the USD is gaining strength on the JPY, that tells us that the carry trade is still active, right? So that means that because the Japanese dollar's losing strength, it means the dollar's getting deployed into other markets, which typically means convert to USD and deploy into other markets, right? And at the same time, the Nikkei should be boosting as well, right? Because it is a signal on risk markets performing. Bull markets, risk markets, the Nikkei and the USD JPY should be going up together, and that gives us health on the carry trade, right? So some triggers I'm looking at is the Japanese yields are potentially like that early warning side, and they've been increasing. But to see what actually matters, we've got to see what the central bank actually does, the Japanese central bank, right? And then we've got to see what that impact is in markets. And we look at that through USD JPY and the Nikkei. So the ideal formula is USD JPY and Nikkei stays strong, stays bullish, and that usually supports the risk market bid. However, if the USD JPY starts losing momentum and turning over, and at the same time we start seeing the Nikkei turning over, right? Turning over, then that would signal a big warning and a high probability signal that the carry trade could be unwinding, or that global liquidity is retreating from markets back into Japan. So that's just something we've got to keep an eye on at the moment as well, because when we look specifically, the USD JPY is still bullish, right? No signs of concern yet. We're coming into pretty high levels. So that'll be something to keep an eye on, because at some stage, I'm sure the Japanese government and the central bank would be thinking their dollar cannot just be rapidly losing so much strength, their yen, I should say. So does that potentially force their hand? I don't know. Again, not a speculator, but we just need to keep watching that. Right now, the USD JPY is bullish, okay? And I wouldn't suggest any bearishness unless we're at least testing the daily bands here, and until we at least start breaking some structure, right? So I would mark out this daily low here. Okay, so if we see this rolling over, USD JPY, losing band strength, the bands are starting to turn, right? You look here, see the bands turn red and we lose this daily structure, okay? That's usually a big signal of momentum shifting like this. Right, if we start to see that, it's still early, not seeing it in the JPY just yet. And the Nikkei is something to watch, however. Okay, so the Nikkei, we're starting to see the Nikkei rolling over. We're rolling over into the bands. The bands are turning over, and we're testing this first primary daily structure holding up this bull trend. So why is this important? If this rolls over, comes back up, what do we have? We have now a daily structure shift and a daily bearish trend. Okay, so that's what we're on the lookout for. Now, the bands are not yet crossed, but they look like they're close to. And if you look back to previous times where we followed this sort of pattern where daily structure is lost, and this is actually quite a common pattern across many charts. I'm going to show you. You look at daily structure. Okay, daily structure being tested, right? Bands are still good. Come back down, testing that daily structure, but this time we're on the other side of the bands and the bands are crossing. That could be a potential sign of concern, right? And if you look at what happened here, we had this big distribution range and we got the signal again crossed here. And this is all already now, to me, intent because of these closes below this low here. And we saw what kind of happened there. Now, if we have a look back here on the Nikkei, so that's what we want to be tracking right now. Does this break down? Does it come back up and retest? And the reason I'm switching to the Nikkei right now is what you'll often find when we're trying to, there's no doubt now that Bitcoin is in some type of bear market. If you're still sitting there going, hey, it's a bull market, it's this, that, and the other, I don't know what you're basing that on, but, and this is actually pretty common behavior because most get left behind until it's too late. Most will realize it's a bear market by the time it's too late. And when I say most, it's a lot of what you'll see on X, right? The people you'll see on X. So now, the key thing we want to track during these transitional phases is, are we going into a deep bear, or is this more of call it a shorter bear, a correction? And that's why now I'm looking at global markets a lot closer, because if Bitcoin is the barometer for risk and it's coming off, now, is this a major risk unwind? So are other markets, global markets, also signaling to us that they're ready to sort of roll over as well? Because that would give us insight into how deep of a bear market we're going into, right? So USD JPY, what's on the watch list for us right now? Well, we'll keep an eye on that December 18th, 19th. I've got it marked on the chart here for what their rates, what their sentiment towards rates is, and whether they hike rates. That could be bad. Let's call it bearish. And importantly, we need to keep monitoring the USD JPY and the Nikkei as a potential signal on global risk appetite and trajectory of markets. Now, quickly head back here. The DXY is probably what we want to look at next, because the DXY is still following the cycle ending pattern, right? So when we go back here, again, I won't dig through it in detail because you can find this all over my X and in past streams, but this is what happens when the Bitcoin cycle is ending and transitioning into a bull market. Okay, you can see the DXY bases and starts its macro trend. Bases, starts its macro trend. So what are we seeing right now? We're seeing the base, right? Now I've got some key levels marked out. You'll see here the macro trend will be confirmed with, what are we looking for again? The bands. If you guys don't have these bands yet, they're just a simple 1221 EMA, but I've scripted them to change color, bullish or bearish. If you want them, just DM me on X, and I'll set them up for you I'll send them to you on TradingView. I give these away for free. Like, it's not rocket science, these bands, but they're just, as you can see, if you've been watching my streams or keeping up with me, they're just a tool that I use along with other signals. Okay, so what is going to tell us that this bear is confirmed into this trend, bullish trend, which is bearish for risk markets? We're already getting all of the early signals. Okay, we had the daily sweep of the lows, we've had daily internal structure turn bullish, and now we're testing the primary high for this daily bearish structure. Okay, so this became the primary high as soon as we swept this low. This is the internal structure that may become the new primary structure if we start closing above this high here. That would tell us that the daily structure shifted bullish and we're going like this. Now, along with that, what's going to be our lagging confirmation are these weekly bands. And we can see they're already heading towards a cross. When they cross green, especially given this context and this rounded bottom, that is now looking like we're heading to the other side of the V, okay? When they cross green, that'll be our lagging confirmation, as we've seen historically when it happens, okay? Now, on the, if we just talk about what we'd need to see in order to start invalidating this, well, we just need structure to turn back over. A starting point would be the DXY heading down here to take out this internal daily low, okay? And then back up and turning back over. But right now, DXY between here and here doesn't create any reason to be bullish. Now, if the DXY waddles around here for a while, we'll analyze it as we go, and it could create interim liquidity. Because if you just think about what that means, it's just the strength of the dollar, and people flock to the dollar for different reasons. But if we get a move like this, that could coincide with potentially some upside in risk. But we got to remember the macro trends are now bearish, so any upside are likely just retraces in a bearish downtrend, right? Until we get more sustained signals from macro to liquidity to crypto structure, or the inverse, like crypto can often lead and the macro can catch up. We just stick to price action and data first. Right now, we've got to treat everything as I'm kind of calling it out with you guys, everything's pointing to bearish, potential transition into a bear market. Next, what should we look at? All right, so Nvidia. Let's look at Nvidia now that we've had a day of trade to digest. Okay, and not great in my opinion. Now I haven't actually looked up historically how the market performs when Nvidia. I haven't looked up historically how the market performs when around Nvidia's earnings, so I don't know if this is usual behavior where potentially within the first few days the market is digesting, or maybe it's a sell the news kind of event. So I guess we'll watch that play out. But first and foremost, again, aside from the speculations, the chart is now telling us we need to be a little bit concerned. Now I'm talking about the major indices. Okay, so we've got the Dow that's starting to have some closes beyond the first daily structure level. And again, look at this. We look at these band signals. So what's the difference between last time's the daily structure was tested and eventually just were sweeps and were good buying opportunities? Well, the difference last times versus these times, if we're looking at this leg, is we've now got swept highs. Sure, we had that here, right? We did have we still had it here. But now look at what the bands are doing, right? When we had these sweeps here and here, these sweeps, bands were all still intact, right? Look at the bands right now. So we've got to consider, is this now becoming the other side of the V, right? Where the bands crossing provides resistance and it's potentially heading lower. Okay, so that's on watch. I'm going to flag that chart. We need to watch that because structure is being tested now. And I'm going to highlight on here the bands. So it just alerts eyes. I do these things so when I flick through charts and I'm trying to remember what to stay on top of, these are all just visual triggers. So if we look back to here where we had this major correction early in the year, you see we had the structure low here. The highs didn't really sweep the highs, came in and attempted to push higher, but didn't. Now, here's where we got the first sign of concern. So we needed to be looking at interaction at these highs on any retest, right? Because we have these bands crossing, we have these strong, again, this becomes intent, market showing its intent, right? Because if it's going to move quickly, it's not going to close and provide this internal structure like this before racing off, not as often, right? Because this is telling us there's some type of pressure trying to move the market in this direction. So this was intent, okay? Whereas here, look how quickly the levels recovered and pushes on. Here, band cross, we have strong ranging pressure down here showing intent. Then when we came back up, we could barely even take the highs. And look how quickly the bands were lost here. Okay, and this would have been that first tap straight back into the band. There's your short. All right, after all this intent signals, inability to take the high here, lost the bands start crossing, come back in, can't even take out the bands. When you can't start closing beyond the bands and reclaim them, it means they're turning red, okay? And the bands are heading down that way, so that was your setup. So that's what's on watch right now for us here, because we need to see if this is going to range. If it goes for the highs again and is rejected while the bands have already started going red and then green like this, then this is potentially going to be a major warning signal. But right now we're already getting those warnings. Okay, DJI is important because now we're talking global barometer. Bitcoin is already bearish, so we're trying to now get ahead of the market as much as we can to try to work out when and what to be repositioning into. you're going to see most people try to convince you to buy the dips way too soon, right? And I've done that in the past. Hence why now our focus is tracking what's going on across the broader markets so we can find the right time to be aligned with liquidity and the right conditions to be getting back into the markets. Okay, you don't want to be buying the dip while even here, look, we got the SPX now showing us similar things, right? We got the bands, the structure's being tested. I'm going to highlight right there. Again, if I go back and show you historical context, where did we test the structure lows? We tested the structure low here, but the bands are all still intact, no issues. Has been very strong throughout, maybe almost tested it there. Bands still intact. However, look what happens up here. The lows came up. Now again, similar pattern to what was happening in the DJI, right? So I won't go through it again, but you see this intention coming in, bands, inability to take the highs. Okay, and we're going to look for similar things on the reversal to tell us when to get back into markets, when to be positioning back in for those. I'm talking about the bigger macro positioning here, obviously. Trades are a different story, and I'm not really wanting to talk too much about the shorter term stuff, shorter term trading on these streams, because it's a very personal thing, and I don't want to lead anyone to the slaughter where when you're talking short-term trades, how I manage a trade, we could be trading the same levels, but the difference in my profitability versus potentially yours is how I execute and manage that trade. So that's why I don't really want to talk about the shorter-term stuff. I want to talk about this stuff because these are the big money makers as well. This is how you can be macro positioned into these bigger moves. So SPX needs to be on watch, needs to be flagged right now, and NDX you can expect the same. Yeah, look at that. So I'm going to highlight the bands here too. Okay, so we're on watch. Okay, now if you joined me on stream yesterday, coming back to Nvidia earnings, let's go down to the Nvidia chart. Leading up to the earnings, I remember seeing, because the markets closed, the earnings came out after, and I remember seeing, I think it was in post markets and in futures, the markets were rallying, and it looks like, obviously I'm sleeping when Wall Street opens most of the time because I'm in Australia. So it looks like the Wall Street took it bearishly for now. Nvidia is down 3% on the day, right? It looks like we had a push up, but for some reason slammed back down. Now, again, not here to speculate. Let's just see what the chart is telling us. And the most important thing I want to bring you guys back to with Nvidia is, and this goes with a lot of the Mag 7, but Nvidia the most at the moment, is that the Nvidia can be a good lead on relative weakness and sometimes strength out of bottoms. This is specifically into tops and out of bottoms, okay? So what you'll find here is, so this orange, if you just pay attention to the orange, is the SPX, and the white is, and the white candles is Nvidia. Now what you'll find is, we'll just go back and look at these major corrections. While the SPX is pushing into these highs here, this is at the last top, Nvidia is somewhat flat. Okay, this is barely pushing the same highs, right? So relative weakness, and you can see specifically the bearish divergence right here, okay, where SPX is still pushing higher, Nvidia is giving you the signal on the coming weakness. All right, if we go back a bit further, here you can see it again. SPX keeps pushing higher, Nvidia is already giving us the signal of some coming weakness. All right, here it is, right again. right there. Nvidia is already giving us the pullback while SPX is still pushing higher. Okay, so you can trace that back. So hence why it's important for us to always be keeping an eye on Nvidia, because Nvidia is going to lead typically the SPX and the NDX, and the NDX is where we get a bit of a barometer on direction for Bitcoin as well. Okay, so right now, what's on watch? Nvidia, the fact that they beat their earnings, we're yet to know if that's actually going to resolve in bullish price action, but you'd expect that it should be bullish, right? The biggest company in the world exceeding the markets or the economists or whoever it is, Wall Street's expectations for earning and beating earnings, beating forecasts, right? You'd expect that's bullish. Now, if you have this divergence where in price, despite the bullish financials, let's call it, but the market is still selling off, then we got to side with the market rather than, I tend to side with the market rather than the speculation, because that's potentially flagging more underlying weakness in something to do with the economy or the liquidity, right? So we need to see, I would say that we need to see, right now, I'm not really seeing a divergence, right? So you can see that the S&P and Nvidia are pretty in sync. If we start seeing the S&P do this, okay, puts in a new high, while Nvidia down here does this, puts in a lower high, then that would be the signal we need to be tracking. That'd be that bearish divergence that I went over with you guys a moment ago in pretty much all of these tops that we've experienced lately. And this is what I'd be looking for to go, all right, there's a bigger risk off move coming, and Nvidia's showing us its hand on the market. Okay, now the bullish scenario is Nvidia, let's take SPX off here now. From a structure perspective, Nvidia still above the dailies, right? The daily primary low. Okay, and if you just look at daily band context, it's not as great of a signal on the equity itself. I think obviously because of how the market closes and opens as well. On the daily, it's not the greatest signal, so we just look at structure. Now, to me, I look at this and I go, look, that's not a sweep. Like that is a strong move to the highs. To me, that still shows intent to want to move higher. As of right now, as of what I can see. However, if we start closing below these lows, then we have to change our bias again, right? Because right now the lows are intact, the daily structure lows intact, and because we've observed a very strong continuation break of this high, right now it's suggesting to me that, yeah, cool, maybe we need to pull back, come a little bit deeper, but we need the intention shown here is that the market wants to move higher. Now, if we were starting to fail into these highs, okay, that's where I'd be assessing behavior. We always got to be assessing the market behavior around the key highs and lows, the key most relevant, most recent structure highs and lows. If we come in here and we start doing these bearish closes, well, that's going to invalidate some of this intent, because now it's also showing intent to go lower. If it starts giving us bearish closes down here, then pushes up, and it's failing to make highs and it's turning over whilst the bands are getting stronger in the red and we're rejecting into them, well, that's building more context for this to rolling over. So those are just some of the things we're looking for, right? As of right now, Nvidia and SPX moving in sync. So tick number one, and structure on Nvidia so far is intact, right? So we can see that it's still in holding this recent trend, but most importantly, the daily structure is intact. RTY, this is the one that's of most relative concern to Bitcoin right now. Because if we think about the context of the market, we know that historically Bitcoin tops around, based on the last 2 cycles, Bitcoin is going to top around 280 days prior to the NDX, right? So the main piece of context here is that Bitcoin tops before the NTX and it already starts moving into its bear market. So we're just keeping that context in mind. If the NDX is rolling over sooner, then we're going to go much deeper, faster. It's not going to play out right until this end of Q1. But what's even closer an indication of trajectory, a closer correlation, is the RTY. So the RTY is the small caps index, where you can see how Bitcoin moves pretty correlated to the RTY. So you can see here the RTY gave us the early signal on this major correction. See how the RTY did it first. It swept, took out the high, and then Bitcoin did the same thing 30 days later, right? So hence, we've got to consider what the RTY is doing at the moment, because being that it's like the small caps 2000 index, it's like a breadth of capital gauge. How is capital just retreating into the majors, the Mag 7, because they're the safest of the big tech, the big giants that lead the market? Or is capital taking more risk and moving further out the risk curve, i.e. moving into things like the Russell 2000 and crypto, right? So that's why Bitcoin and the RTY in these different circumstances are another good signal to track together. Okay, so RTY is still struggling at this all-time high from back in 2021. You can see here how they behaved relatively the same, right? RTY and Bitcoin. So we just track it to see if there's any type of signal there where we can go, hey, they're both kind of moving in lockstep at the moment. And if the RTY is going to keep going down, it's likely Bitcoin is going to follow with it. And we're already see this pattern that I've been pointing out over and over again, where the daily structure here gets tested, but now we're seeing intent, right? Intent to move lower. Market's showing us intent to move lower here with all these closes, and it's already, the bands have already turned red, separating, and we've already got first rejections off the band. So again, this is painting more context for the bearish environment that we're in. Okay, and now this kind of segues to crypto, and I spent a little bit of time on these other charts because this is how you understand the environment coming into crypto. You can't just jump into the crypto charts. Well, look, I'm sure many people can in their own ways and with their own systems and strategies. But for me, when I worked out these things, when I kept looking under the hood of Bitcoin and going, hey, what actually moves this thing? Why does it move? In what types of environments does it move? That's when I found, the more that I keep digging and finding just the specific things that relate, the better my results came with Bitcoin and crypto, and especially when it comes to trading the macro cycle and the bigger moves. So hence, this all builds the context of the DEX is showing us that the dollar is gaining strength and exhibiting that pattern of cycle ending behavior into a bear market. Net liquidity is becoming tighter, not looser, as a lot of market participants and a lot of people were expecting. It was looser liquidity. Well, actually, we're not seeing looser liquidity yet. So that also supports the bear case versus the bull case. And Bitcoin has already showed its hand, as the risk market does, where it tends to lead, especially to the downside. Capital retreats when it senses and sniffs out that the conditions aren't right. And now we're actually also seeing call it somewhat of those confirming signals across the broader markets that they may be starting to unwind or start to come off. Okay, so let's head into crypto now. Bitcoin is in a bear market, right? Now, sure, it's subjective. Trading, investing is subjective. It's all based on the individual. My perception of the markets is my reality, right? How I read the markets is my reality. Now, does that mean because I read it in a certain way, I'm going to make money out of it? No, like I could read the markets wrong, of course, but sure, it's all subjective. But if you ask me, I'll show you why I believe Bitcoin's in a bull market. And for me, it's some really objective things that Bitcoin is doing that it's done historically when it's transitioning into a bear market or where it's already in a bear market. Okay. So if I just, first of all, I'll just clear up this chart just so we can get really clear on why I'm telling you that we're in a bear market. Now, what I don't want you to walk away with is the thought or idea that I know when the bull market's going to start again, I know when the bear market's going to end, and I know, or that just because I say that we're in a bear market, we couldn't be in a bull market tomorrow. The best part about trading is you can change your bias, and you should change your bias, but only when your strategy, your system, however you approach the markets tells you to change your bias. Okay. So right now I look at some key signals. If we start on the weekly, I pretty much I can take everything that I need to make this decision based on the weekly and the monthly. First, I'm going to show you the relative strength index. Okay. Now, when Bitcoin is in a bear market, the RSI sustains below the 50 level, right? When you can see it here. Okay. When Bitcoin moves to a bull market, the RSIs are above 50. Now, ignore divergences, ignore oversold, any of that stuff for the moment. Just pay attention to the mid-level. That's all you need to on this weekly chart. As this first one of these, I'm going to give you a set of signals, right? RSI below the 50 level on the weekly chart, sustained, bear market. You can see it. Look at the weakness, right? It starts here. We get a pull. Sure, you get that divergence, but look, the bid comes back down into under the 50, and then pretty much for the entire bear market, we're under 50. Now, when we start making that transition, we head back over the 50. So where are we now? Well, look at how we've breached the 50 level as we've been making these bearish divergences, but more important to me is where the RSI sustains. Now, historically, as we've moved up, we've at least retained or recovered. Now look where we are, right? And soon you're going to hear most of X yell at you, oh, we're oversold, we're under 30. This, yeah, cool, right? But until we get back above here, this is not bear market, this is not bull market like behavior, first and foremost in the RSI. Okay, so we'll keep that in mind. I'm going to show you now also, this is just a couple of indicators I'll show you before we move into the price action itself. MACD, weekly chart again. What do you notice about the MACD when we're in a bull market versus the bear market? And I'll give you a clue. It's the same as the RSI. All you need to do is just look at the mid-level, right? We're creating mountains in a bull market. Like, yeah, sure, we hover around here, but ultimately we're getting these pushes where we're creating mountains. When we're moving into the bear market, we start breaching the mid-level, the zero. we start going into the negatives and we start making these troughs. Like, look at that. Look how far we're pulling out here. Okay, so this will likely do this now as we have rallies and stuff. You know, it'll round, and maybe we'll go like this. And then once we start heading back above here, right, so you see these points, see how I'm marking them here, look at where they correlate on the chart. Okay, once we start crossing and getting this MACD bid over, you start to see it happening. And if you look back to here, we started getting the bid. So we had these massive sell-offs and we started getting the bid through here, and then this is where FTX crashed. But this actually I was looking at to suggest there's actually relative strength underneath, because despite FTX crashing through here, the momentum stayed in the MACD. But anyway, so that's another trigger. Now we'll move on to the stuff that's more important. Price action. First and foremost, again, a lagging signal, but the weekly bands, you can just see it on the chart. The bands don't turn red unless we're in a bull market, and they turn green. Unless we're in a bear market, and they turn green when we're in a bull market. And if you look at how price behaves transitioning into a bear market, you get pretty much what we've got now, where you get this massive push down and you're waiting to maybe even get the shorts, and everyone's yelling at you, buy the dip, you know, buy the dip, buy the dip, buy the dip, buy the dip. They get this counter trend rally straight back into the bands, and everybody's celebrating, right? Oh yeah, no, I told you were wrong. Bears are cooked, blah, blah, blah. Meanwhile, these are just counter trend rallies, right? Bear market's over, counter trend rally. Okay. So first and foremost, it's a lagging indicator, but hey, I'd be happier to be out of the market up here last cycle at 50K rather than if you ended up selling through here at 20K. So where are we now? Well, the bands have barely crossed red this entire cycle. We were tested in here, but still retained. And have a look at where we are right now. Red or green, legends? Red. So that to me is a big warning sign. Now, again, it supports my thesis that any rallies that we have, look at the weekly structure, okay? And I went over this in the last stream, and I've been posting about this. Even if the daily turns bullish, unless new weekly structures created, this is the primary high. And now we've got macro areas for the macro short, okay? The bands, as we can see, once those bands cross, if we get back to them, like his first touch as they were crossing, that's what we'll probably, oh look, we've had a pretty big sell-off. But as we come back into them, that's going to be those areas that we look for those bigger macro short signals, okay? Because the current way that we've broken down suggests to me that we're gonna have, like, when a rally does happen, unless Bitcoin is really weak and the markets are super weak, we should have a pretty decent rally at least into these bands, because these bands are going to slowly get wider, okay, and follow price down. We're going to have a pretty decent rally into these bands, and I'm really looking at this 100K level, right? Because it's that number, it's that psychological level. You're going to get the people jumping on X going, oh, never back below 100K again, and all that sort of stuff if we get back just above it. And we're going to be watching these bands closely along with other triggers and signals, because even if we're wrong, this is the kind of trade that you have to take, right? Because, well, I have to take, I say, even if I'm wrong, I should say, because this is the kind of trade I have to take, because the weekly structure is bearish, and in my system, it's a massive trend, macro trend continuation trade. Just like down here, I bought a lot of Bitcoin. It's because once we started shifting structure here and here, right, along with the bands crossing, so I'll just draw it out a little bit neater. Here, 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 we shifted structure, came back to test it, our lows down here, right? So these are all buys for me. I was buying Bitcoin all through here and I stopped here, right? Because that's where I won't share this on the stream now because it will take us, it will go for way too long, and we've already gone for almost an hour. But I have different phases of accumulation and then phases of distribution. Hence, I'm almost fully out of Bitcoin. The only Bitcoin I'm still actually holding is my forever Bitcoin, right? The stuff that I'll just keep holding forever for my kids, etc. I hold it in long term. In Australia, we have like this thing called self-managed super, which is like retirement accounts in other parts of the world. That's where I have those portions allocated, and I just won't touch it because I can't touch it till I'm like 65 anyway. So anyway, getting back to this. So if you see here exactly what I did in the bull market transition, the bear market to bull market, weekly flips, we come back in, we retest, and we're heading off, right? It's exactly the same on the other side, right? If I do this, what do you see? It's the same. Okay, that was where we bought the bull market. This is where I'm gonna sell the bull market, right? So it's the same. So this is essentially the macro trade that I'm looking for. I did actually take a few small, very small longs, just futures using perpetuals, and I've been stopped out because I was expecting Bitcoin to give us a little bit more reaction from 100K, around the 100K levels. I didn't really take much because I've been predominantly risk off and I'm net short. So hence I have been looking for, because I think we still have the case for that counter trend rally, right? And this is where, when that counter trend rally happens, alts will probably zoom, right? And you have the whole market. That's where we'll be watching sentiment really closely, because as the market gets euphoric again and starts getting, celebrating, the bulls are doing all their victory lapping as we're coming into these resistances. And I like this area here because this is going to essentially make people think we've reclaimed 100K. And then if we get our triggers, that's the macro short I'm looking for. Right? But I do still think with that, we're likely at some stage, it's guaranteed on the way down, you're going to have counter trend rallies. Now, if you're a good counter trend trader, sure, use your systems and trade those things, but just remember the context, right? In a bull market, your net bias should be long, and you're getting those if you're trading on the swing higher time frames. But if you're a short-term trader, sure, you can take opportunities in these pullbacks as well, right? But obviously, it pays to be long in bull markets, net long. Now, as I've painted all of this context for you across the liquidity to global markets down into crypto, to me, it's going to pay to be net short, okay? And we play, just like we played the bull market, we play the bear market the same way. Now, if we just have a quick look, how long has it been? Almost an hour. Just quickly, we'll just have a look at the daily structure. And sorry, I should just touch on that. I hope that covers why I believe we're in a bear market now. I showed you the RSI, the MACD, the weekly bands confirmation signal, the weekly structure is bearish, and that should do it. Now, I track a lot more other things, obviously, but I'm not going to go through all of that because we'll be on here for hours. So daily, looking at the daily's pretty beaten down. Now, this was still our last primary high. So we are due, if you just understand the nature of how price works, if that's our last primary high, we're just waiting for wherever this next low sets in, because it needs to retrace before it can make its new low again. Because the market's not just going to go like this. all the way down, right? That's not how markets work. People need to be getting in and out of positions and etc., doing what markets do. So at some stage, the low's going to come in and we're going to bounce, but this is our daily primary high. So don't even bother getting bullish I'm talking about bullish for new all-time highs or anything until at the very least we back above that daily high, or we take the low and create new weekly and daily structure. Those are the things that we can look for to be bullish again. So whenever this low comes in, if you're a great counter trend trader, sure, you might be looking for those trades. I am looking for a few of those as well because I've got systems that allow me to trade counter trend successfully. Some of the most immediate triggers I'm looking for when Bitcoin pivots, the main thing I suggest you guys look out for is look at weekly lows, consecutive weekly lows being swept, and then consecutive daily lows being swept, because that's showing you intent, right? For when it increases the probabilities for pivots to happen. So see how these weekly lows are swept, consecutive weekly lows swept, consecutive weekly, including multi-week swept, right? These are all signs of major pivots. See at the highs, you see consecutive weeklies swept, right? Those are those signs. And then as you move down on the lower time frames, so right now our last weekly low is here. So if we close like this, again, it pushes out the duration of when that next pivot low is going to come in on the weekly, because we want to see the next week's sweep here, and then after that it could mean that we start building a bit of structure up, okay? Or we get a big sweep, push up, and then push back down. Like, all of these can play out, but right now we just look at this and we go, it doesn't really look like we're going to bounce heavily too soon, because look how bearish we're going to close unless we repair this. Like, if this week ends up closing like this with a candle like this sort of thing, well, then next week I suppose we'd probably fill some wick in here, and we could start to consider a pivot coming in. And a pivot just to create, we've got to side with the current structure. The pivot's just to create the next higher, lower high, right? So again, just look for those pivot signals, consecutive weekly lows and then daily lows swept, right? So if you see it here, you'll see lows swept. Okay, it wasn't a consecutive low there, but see into the highs, you got key high swept plus consecutive daily highs. We started getting these consecutive sweeps here, and that's where I lost a couple of trades, small trades, risks all managed, so it doesn't bother. It's fine in my system. It's all within the variability of the losses in my system. But I took it, and that's where now, obviously, we've now invalidated these pivot signals potentially coming in. So right now, I'm just watching that last week's low, yearly open. I think that's going to be a short-term retest level. And depending on how we approach that level, there could be, if we're still going to take time and we're rejecting off last week's low, I'd say that we could be coming down to sweep this low again, and then that would be a daily structure shift if we did something like that, right, on the daily. So on the very lower time frames, that could be that is a key area that I'm watching as a potential reclaim area. It's been just over an hour, legends. Thank you for joining me. That's pretty much it for today's session. I'll jump on again tomorrow. Sorry, Cotstar, let me just have a look what you got there. I missed that. We need some shorter candles as well. These are very expansive. Yeah, 100%. Yep. You're right. You know, and you see, yeah, when you get these shorter candles, that's when you can see the momentum fading, right? Shorter candles, and then you get that wick to take out a few candle highs, or you get that push that fails to take out where those candles were losing momentum. And yeah, for sure, these are very expansive candles. Like this, even this daily is still very expansive. It's kind of like it doesn't really make me want to jump in here and expect to pivot, right? Because I'm looking at this long daily candle and I'll go, I want to see it sweep, or maybe an inside bar and then another short candle, and then it sweeps. Kind of like what I was just saying before, where here we hover around, maybe we even come up to the underside of last week low over the weekend and get rejected, and it sets up next week to sweep this week's low that's set in, right? This week's low here. Maybe it sets up next week. If we get this kind of move over the weekend and we reject here over the weekend, we can't reclaim this. It could be setting up next week to sweep last week's low and come down here. And I'd be interested, if we get this exact short setup, then long setup. I'd probably be interested in giving that a crack. But also, again, I'm going to watch this and I may be interested in shorting that too. But we'll see. We'll see how price behaves at the levels and we'll go from there. Thanks, legends. Thanks for joining me. And as always, if you got something out of this, please give me a like, subscribe, follow me on X. Otherwise, I'll be back here again tomorrow at the close. Enjoy, legends. See ya.